Good afternoon. It's Sunday, February the 4th, bringing to you a market update video. So I really quickly just want to touch on market dynamic, where we stand right now with regards to that. Where are we in terms of trend? Are we in the earlier stages of the trend, or are we in the later stages of the trend? Wink, wink. What does that mean for us? How we should adjust our risk? How we should look at the market because of that. So I already covered this a little bit on my social media, but we just need to understand how the market tends to move, and the market tends to move in threes. So you have your three waves up, very strong trends. You have a fourth wave, and then you have your three waves down. We have a correction here, very common type of correction, three waves down correction. Then you have three waves up, potentially going to start a fourth wave up. Once again, a very strong trend, robust trend. But what's important here is understanding that anything beyond a third leg up, the upside risk substantially increases. The odds of this trend failing are increasing gradually with each leg up. So the lowest risk is going to be found in the first leg up. The second leg up is going to be a little more risk, but not quite as much. As that trend ages more and more, the likelihood it fails increases more and more as well. So the best trades are found in the first and the second leg up. The third leg up is where things get a little more, you have to be a little more cautious and understand that the failure rate's going to be increased. And then the fourth leg up, I'm really not all that interested in participating at all. And if I do so, it's going to be with a smaller position size, tighter stops. It's just not likely that you see a whole lot of momentum continue to the upside beyond the third leg up. So I'm not just making this up either. If we just look back here at the previous bull market, first leg, second leg, third leg, fourth leg up, very strong trend. Get that fourth leg. You have a correction that follows, and then you have your first leg up, second leg, third leg, correction, first leg, second leg, third leg, two legs down, correction. And then you have one leg up, two legs up. You don't even get a third leg up. You don't always get the third leg up, but it's quite common you do. And then in the bear market of 2022, first leg, second leg, third leg down, you get a correction of more so, this is, believe it or not, a 17% rise in a very short period of time. So it was just one huge leg up. Then you have one leg down, two legs down, three legs down, one leg down, two legs down, three legs down, four legs down. So it's just how the markets move. So it's good to know that, because we can assess what the risk profile is because of that. So we're currently in the fourth leg up if we break higher tomorrow. And because of that aged trend that we are currently within, the odds of it failing are substantially higher. So we just want to be more careful with long positions. Certainly don't be opening up 3 or 4 long positions. I would really only open up one long position at max. And I'll probably even do so with a smaller position size, just because I know that the risk of failure is so much higher. In fact, what I'm doing at this point in time, I'm not shorting the market, but I am building a watch list of all the names that have been displaying significant weakness. I've actually been doing that since the third leg up, because I know that around this point in time, we're going to eventually lose this support line. And at that point, I want to be short the weakest names. So as the market begins to fizzle out, kind of look what we saw here. We knew that this leg already had a pretty strong move higher. We had about 9% move higher. We need some sort of correction. We need some sort of pullback. We went and we shorted Palantir and I believe one more name. And because of that preparation, we caught the top end of that correction. Well, now we're not just looking for it to be a quick correction to the short-term moving averages. Let me get rid of this. Quick. Do that. We're not just looking for it to be a pullback to the short-term moving averages like we were here. In fact, we overshot a little bit. We're actually looking to see a correction maybe down to the 50 moving average. And if this turns into a full-blown correction, we could actually lose the 50 moving average, and this could really materialize into something more. And that wouldn't be bad either. In fact, I would more than welcome it. It just resets the cycle, and we can get these really powerful moves up here again, which is where quick, fast money is made in the market, where you want to be aggressive. This is not where you want to be aggressive. So with that said, the risk is elevated at this point in time. We're going to look at the inverse equities, assets that move inverse these equities in just a second, that are really going to reaffirm the possible scenario I see occurring in the next week or two. If you look at the seasonality index, You can see also February is notoriously a weak time of the year. We just entered the month, so that could once again transpire as well. But all I'm saying here is that it warrants added caution at this point in time. If we look at the dollar right now, you could see this is, by the way, this is something I've said before, but for those of you that are new, the dollar moves inverse of equities. It moves inverse the QQQ, S&P 500, IWM, and all stocks that those encompass. Really anything in the New York Stock Exchange in most instances. So when you see money flowing into the dollar, it's a risk-off posture. And that's generally going to put pressure on the indexes. There are times where it doesn't always work like that, but in most instances it does. So the dollar is starting to show some strength here. You can see it recaptured the 50 moving average, the declining 50 moving average. And since it was declining, generally what happens is price will break above it or stay below it, kind of consolidate for a couple of weeks, and then once that flattens out, it will then attempt to break higher. If we look at, here's a great example, FSLY, you can see it recaptured the 50 moving average while it's still declining. It just moved sideways until this started to really flatten out, and once it started to move higher, that's when it broke out. So it's just something you tend to see. It's what the moving average is, how the moving average is slanted, angled, the trajectory of it is more important than where price is itself. If price recaptures a 50 moving average, it's not very convincing if it's doing so when it is slanted lower. And I pointed this out in real time. Same thing here with the 10-year yields. You can see we ran into a declining 50 moving average. Because it's declining versus, let's say, flat, it acted as a more potent resistance level, and there was a harsh rejection. But now the question is it just going to consolidate for a couple more weeks, let that flatten out, and then look to break out just like FSLY did, or not? We'll have to wait and see. But that's the reason we keep track of these assets. They move inverse the equities, and if they're basing and preparing for a big move higher, it's going to be putting substantial pressure on the equities, and we're likely to see them do just the inverse. It's not a coincidence that these began to break down in late October, and the indexes began to break out in late October. It's pretty easy to identify inverse relationship between the two. So to conclude, the indexes are extended. They've already had potentially going to have a fourth leg up here. This trend line, actually, I didn't point out, although it's obviously steep and not something that can be maintained, it's also at 1, 2, 3, 4 points of contact. Although we didn't touch it here, remember, you draw your trend lines with crayons, not with a fine tip pencil. It's an area rather than an exact point. So we have 4 points of contact. The more times you come in contact with a particular level, a particular trend line, the weaker it is becoming, and the more likely it is to fatigue and not act as support in the next touch. So usually the fourth knock at the door is enough to get the trick done. I'm sure the fifth will, and if it doesn't, certainly the sixth. But it's rare you get a fifth support bounce. But you had something similar back here, not to get carried away, but you have your trend line, or what was it? Starting from here, where you have 1, 2, 3, 4 points of contact. We actually had a fifth bounce very briefly and then rolled. So we're right here right now, in my opinion. No predictions, but we are right up here, at least in terms for me of risk. That's where I see the risk. So up here, I was very cautious. I'm very cautious up here. So that's where we are in the indexes. Just be cautious to the long side. Don't get too crazy. And then also, if we look at the Qs, this is kind of what I see playing out in the coming months, where maybe we have another little move higher, another 2, 3, 4% move higher, another day 2, then kind of fizzle out, lose the uptrend leg, move sideways, and then look to break out in April, late March, early April, which I believe are historically strong months, right? Yeah, March, April is a very strong month. Yeah, so it would just be perfect, right? You correct here, maybe the end of March, you start to see us push back up to the upper end of a range, and then we break out in April and have a nice, powerful move higher. So that's where we stand with regards to indexes and those that move inverse. Bitcoin recaptured the 50 moving average. Now it's just moving sideways. I'm really not interested in any names in any of the Bitcoin proxies, Coin, Mara, Riot, MSTR. They've just been so weak versus the asset that they follow itself, so that being Bitcoin. And I won't get too caught up with this, but if we look at Bitcoin, you could see that Bitcoin had its first leg up, second leg up. Now compare that to, let's say, Mara. It's really the first leg up, and it was very ugly move, or not ugly move, but the correction was very ugly. First leg up, then it pulls back. I guess you could call that a pullback, but it really moved right back into a bear market. 64% move lower, and then it really exploded higher here, about 350% move in 72 days. But it's already given back really like all those gains and more. It's actually below where that you would qualify moving into that second leg up. So you compare this Mara, one of the proxies, to Bitcoin itself. You can see Bitcoin's still well above that where it began its second leg up. So that's the theme with all the crypto names. If you're going to get in them, you want to get in them right where they're about to have that explosive move. And I don't think that we're anywhere near that. I think we're going to have a lot more of this before we have anything like this, if we get anything like this. If you look at the weekly, these charts are severely damaged. These are major sellers that stepped in here. Huge volume. You've never even seen sell volume like that before. So it could be a major top. With that said, if we go back here, let's take a look at the names that I'm watching that are actionable for next week. So these are all names that I will look to trade as early as tomorrow. So you have Cliff. By the way, down here you just have your, basically just a quick brief description of what the company does. It could just help you identify themes in the market. For instance, this is a steel company, as is, I don't know why it's not on here, NUE, which is another good name here, breaking out to all-time highs at a huge base. They're both steel companies. There's clearly a theme there, right? Steel companies are moving higher. Really powerful move on Tuesday. Cliff, really powerful move on Tuesday. So that's why I like to see just a general idea of what they do. And then to the bottom right here is just in the case that you want to look to see how it's performing versus the sector itself, you just type in XLB. This stock moves most closely with materials sector. So, you want to see, is it outperforming? I would say it's outperforming as of right now. This is bear flagging, whereas Cliff is bull flagging. So just for those that want to go that extra mile. So this is Cliff. You can see very strong move up. Nice little cup with handle formation here. Just looking for a break above the high of this flag, and I'll look to go long. Ideally, move sideways one more day, let that moving average, short-term moving average really catch up and then break higher, but it's very rare that stocks do exactly what you want. So if it does break out on Monday, tomorrow, I'll entertain going long. ASO, a nice little consolidation here. You're going to notice the theme here, very powerful move high. You're going to see very powerful moves higher on the left side of the charts, and then they've had nice consolidation over the course of the last 3 to 4 weeks. Things are getting real tight here. This is a pivot point at which I believe momentum could swing to the buyers, into the direction of the buyers. So I'd be looking to get involved with that 65 area. Here you have Shop. So I had a sympathy move off of Amazon. Really just not a fun time to be a bear. Had a very strong move lower here. About 4% move lower on a pickup in volume. And then the next day it's up. It gaps right back up 4% and closes up around 9% on the day on even heavier volume. So, this reminds me, one thing I want to talk about very quickly here. Obviously on Wednesday, the Fed threw a wrench in the markets, basically taking out the what most market participants believed would be a rate cut as early as March. He took that off the table, and that really caused some selling to enter the market. And because of that, what's really important is what followed that. So we saw selling on Wednesday, and it was on heavy volume heavier than we've seen in quite some time. Now, what's most important is what follows the next day. So when you have that kind of move, which we had about almost a 2% move lower on a heavy volume, and the next day there's no follow through. In fact, you close at the upper range of the day. This is what's regarded as being an expectation breaker. So we did the same thing. We shorted the market on this day, and I can guarantee you a lot of other people short the market as well. So a lot of people are moving to the short side of the market. We're believing, based off of what we see technically, which is valid, that this market looks like it's due for further downside. But there was no follow through at all. So what's happening now is the next day, especially on Friday, everyone is caught on the wrong side of the trade. So you have everyone scurrying to reposition, get back on whatever direction, and position into whatever direction they believe the market's going to move. And that causes this very rapid short squeeze, which is why we saw a huge reversal there. So that's what happened. You get these expectation breakers in very strong markets. So this reaffirmed the strength of this trend. Here you had that expectation breaker right here. We had a very strong move up in November. Then we had the Qs closed down about a percent move, 1.5%. But that was different compared to what we've seen the last couple of weeks. And we were already up like 9 days. So most people thought, all right, it's time for the market to pull back. The next day we didn't get that. Everyone was positioned short here for a quick, perhaps, pullback to short-term moving averages. Then they looked to go long again. It didn't happen. So everyone's caught on the wrong side of the trade. The next day the Qs are up another almost 2.5%. So expectation breaker, expectation breaker, expectation breaker over here. They're very common and powerful trends, and we got another expectation breaker here. That's why you got to be very cautious when you're shorting very strong trends. And really, it's not until you get the break of a major trend line that you could do so with a little more confidence. And I prefer that it be on the gap down. Like right here, we lose this uptrend support, and it was with a gap left unfilled. And that really, we also had a confluence where we didn't just lose a major support trend line, but also the 10 and 20. Everything needs to line up really well when you're going to be shorting a very powerful trend, or you can get caught on the wrong side of the trade and hurt really bad. So I just want to touch on expectation breakers, understanding what they are, because they reaffirm the strength of a trend, and it gives reason to go long on Friday because of getting that expectation breaker, just like it did here and just like it did here or here. Okay, so just want to cover that real quick. So going back to shop, you have a nice little base here. Oh, I was on shop or AOI. I can't recall where I was. Sorry. I'm going to just start with shop again. I'm sorry. Moving sideways here. Nice consolidation. Gap down. We gap back up. So if you look at the short-term time frames, that actually gives you a bit of an island reversal. Very powerful reversal pattern, which is where you gap down, then gap right back up. And then we close at the upper side of the range, right below resistance. If Amazon continues tomorrow to move higher, which it looks like it very well could, well, then we might just see shop move higher as well. Earnings are in about a week and a half. They're not this upcoming trading week, but the following. It gives enough time to get a quick swing trade off. So I really like this one. I'll be watching it closely tomorrow. AAOI, and it's in this downtrend, 1, 2, 3 points of contact. You have a double bottom structure here at the 50 moving average. If we break above this, you're going to be getting it a little early, but it could be very rewarding. We're going to want to see very heavy volume coming through tomorrow morning. Earnings are in about 2 to 3 weeks, but overall very strong group, so it's something that'd be worth entertaining. Strong move up. You have 3 waves. You basically have 3 waves down. 1 wave, 2 waves down, 3 waves down, potentially even 4 waves, but at least 3 waves down. Correction, not looking to break out. Rocket, it's in the financial sector. It's been lagging, but it's a small cap stock. I actually have medium cap stock. It's high short interest. It's more of a short squeeze name, so you can think of like stocks like Carvana. A firm reports, I believe, on Thursday, obviously, Thursday after close. If a firm reports well, it's a short squeeze stock. It could cause a breadth to improve in the short interest stocks. So Affirm, Carvana, Beyond Meat, Hood, stocks of that general nature. And this has a very clear pivot point to play. So I like clean, easy to identify pivot points, because if I see it, more other people are likely to see it as well. We have a rising 50 moving average. You can see price action is getting real tight here. Break over 13, I'd be really interested. This is for contracts. I think you could trade options here or shares. This is shares. This is options, shares, options, or shares. If it's optionable, shares as well can be traded. Low You have a double bottom neckline here. Break over that neckline. You also have a downtrend line to be taken out. I'd be interested in going long. Then you have your Burlington cofactory, so huge gap up off of earnings. It's a strong catalyst. Price surges higher. Very tight consolidation and a nice base. 50 moving average finally caught up. Golden cross. Will we break higher over 199? I'd be interested. What am I looking for? I'm looking to see us break above 199. I want to see huge volume, and I want to use the high of that 10-minute candlestick, the first 10-minute candlestick, if it occurs within the first 10 minutes of the day, as my entry point. Then you have LEN Home Builders, really strong move up, unfilled gap, just moving sideways now. Really nice consolidation. Break over this level, 155.70, 156. I'd really be interested in going long. Citigroup, a lot of financial names pulled back last week off the back of very poorly received earnings out of the regional banks, so the smaller banks. If you look at KRE, got absolutely annihilated last week. Basically, it was down 12% in like just a couple of weeks at one point, or a couple of days. We actually benefited off of this. We had Schwab. We had a nice, really quick 3% move down. But with that said, it looks like they're now much of these banks are at strong resistances. So broke out of this base, pulling back the 10 moving average, which is in confluence with the former resistance. So do we flip this to support? Not sure, but I'm looking to go long. You can go long over the doji high, which is Friday's high, or what I'll do is I'm going to wait until we get over this 56.20 level, which there's a bit of a gap down here. So I just want to get that gap down to an active resistance. I want to get through that level, and then I'll look to go long. So yeah, I'm definitely interested here. These are all the remaining names now are going to be financial names. So this is still in a base, but very nice base, very easy to identify pivot point. You've been rejected here quite a few times, but the more times you knock, the more likely to get through. So GS over the 390.50 level, and then you got Synchrony Financial. You see broke out. Look at the pullback here. It's very shallow pullback. Obviously, we're back in the range, so it's not as strong as Citi, which maintained above that range and also left that gap unfilled. So more strength there, but it's a very controlled pullback, and that's what I like to see. So you can go long over Friday's high. This would be constituted as playing at 20 exponential moving average bounce, or I would actually, let me take that back. I would use Thursday's high instead, just because there was a low. This would have been the entry candlestick. Actually, let me look at the 10-minute candlestick or 10-minute time frame real quick. Go here. Okay, what do we got us here? Nope, yeah, you'd use Friday's high. Sorry about that. Yep, so Friday's high over 39.10 area, and then you got Capital One Financial. Once again, broke out of the base. It's remained above the base resistance, trying to flip that to support. So you can go long over Friday's high as well. So there's quite a few good setups. Just remember, though, the market dynamic. It's really in an iffy spot as of right now. We're on that fourth leg up, so you're taking more risk. So I really wouldn't open more than one long position to the upside, personally, at this point. And if you want, you could even scale back your position size. With that said, I have one question here I want to answer for Carter here. He just asked, how do I generally measure, how extended a stock is intermediate term? All I'm doing is using the 50 moving average, and I'm just basically finding what the mean is before the stock usually pulls back. So if you look at the 50 moving average here, this yellow line, you can see that at this point in time it was up about 12%, and then there was a mean reversal. So price pulled back into the 50 moving average. So I'm just looking at that over and over. So we got 12%, then again over here it was about 6%, again over here it was about 10%, here 11%, here 10%, 8%. You get the idea here, right? So then I'm just to take the average of that, which I would say about like 9-10% is how extended a stock, this stock QQQ, usually gets from its 50 moving average before it sees at least some sort of meaningful consolidation a couple of weeks, or reverses entirely to the mean, which is in this case the 50 moving average. So that's how I measure if a stock's overextended or not. And if you look at the Qs right now, technically speaking, it's not overextended in that term. However, if it were to move higher in the next 2-3 days, it would become extended, and that would really build out the bearish case for the Qs, at least short term, even further, because now it would be overextended and in its fourth leg up. But I'm not going to keep on talking about that. So that's where I stand with the market. If you guys have any questions, feel free to let me know in the Discord. Have a good rest of your weekend. I will see you in the Discord.